Hello, everybody. Welcome back to 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano, this time coming at you from, yes, East Coast of the U.S. Once again. Actually, have I filmed any episodes here? I don't think I've filmed any episodes here yet. So first episode, I suppose, for the next few episodes will be coming at you from Connecticut. Looking forward this week. Always an interesting week on GameStop, right? Was in transit the past couple days, so we'll take some time to go over some of my just some broader elements about our market contextual situation, given how important it is for forecasting what might be in store with GameStop's price action coming up. It's been a big determinant on it seems where we've gone, especially over the past few weeks. That this has been things like ETF shorting, ETF outflows have been very influential on GameStop's price in particular. So we'll take a look at some of the broader market context stuff today that I've mentioned over the past couple days, but that I didn't have an opportunity to work into videos. And we'll think about what we have coming up later in the week as far as thinking about price action, but also our live stream this week. As I mentioned, for those of you who were able to attend the past couple weeks, we will be taking an in-depth look. I will be doing a live in-depth look at PSA's new submission app, going through my own childhood Pokemon card collection. So we'll see how that works, and then maybe see if that can give us any insight as far as what to expect about company announcements heading into Q4 earnings report, which we still don't know when actually that's going to happen. Still waiting on that to pop up, which, believe it or not, this announcement I think is going to play a profound role in our price action in the next few weeks to come, whenever it does happen. So that's the source of today's title, Edging into Earnings, right? And it's basically this idea that while we don't know for sure when we're going to get the earnings release, we're going to see a more mild IV appreciation effect. And why that's important, I'll break down for us today as we get into our discussion. First off, thanks go out to, this week's thanks, both for today's newsletter and for yesterday's, go out to Mate Cheska, a wonderful name, indicates exactly what country this person likely comes from, which is from the Czech lands, so either Bohemia, Moravia, or the little piece of Silesia, I suppose, that is still in the modern-day Czech Republic. So thank you very much, Mate. And thanks, of course, always to our monthly supporters, Dat Scrufto and Ken Wedmerlin, who generously contribute every month to helping offset some of my data expenses, helping me, right? I have a lot of premium data subscriptions that I use to put together these newsletters, and they both help make those costs a little bit less heavy on my shoulders. So many thanks go out to them and to everyone who has contributed to supporting the channel and to my research activities thus far over these. Gosh, I guess we're going on over 9 months now. Definitely, I think it's like 9 months. 9 months in a week, or not? No. We're mid March now. So I think it's like exactly 9 months, something like that. But in any case, many thanks to everyone out there for helping me keep everything according to my mission, which is that nothing goes behind a paywall, nothing is monetized, and is open access to everyone. So thanks very much. I wanted to, speaking of the broader community, and speaking of trying to understand the bigger picture of what's going on with GameStop, if you hadn't had a chance recently, I would really recommend you go and check out some of the work that's been done on dark pools by Twitter user Boiler Polly, or Paul Branham here. Paul just recently put out some due diligence on his dark pool observations. So Paul's been taking a look here at what exactly has been going on with the dark pools. There's been this question that Paul has narrowed down, and that is the question of what's with all these 5,000 share blocks of shares that have been going back and forth between dark pools. Now, this is particularly interesting because dark pool information, as far as trades, we have not had transparency into what any of that looked like prior to 2021. We've only really had dark pool scanners and dark pool transaction data public since 2021. So this is very new. We don't know what's been going on basically prior to 2021, but Paul's gone ahead and he's looked through our data over the past few years. And I won't go into it in exhaustive detail here, but basically what he has seen is numbers of shares of GameStop being traded in 5,000 share blocks basically every single day, with the exception of one day in the past year. So that is September 19th, I think it is, September 19th or September 20th, which is the day that we had, a huge amount of dark pool volume. We got a massive dark pool order on GameStop, $92 million, over 4 million shares. And what's very interesting is these dark pool orders have totaled up to shares in the post-split adjusted, what would have been 9 million shares, right? What would have been 9 million shares that have been totaling something like 36 million shares, something like that, total kind of going back and forth. Potentially, like I said, I won't go into it exhaustively, but what it does look like here, and you guys go take a look at this yourself if you haven't had the chance to, what it looks like this data is suggesting is that potentially Ryan Cohen's share order was never settled back in 2020, 2021, and that the fake shares responsible for let's say, for meeting that trade, right? So something like the necessity to have his trade settled has just been sort of hot potatoed back and forth, potentially, or bouncing around an internalized system, gets, packaged up in this obligation, that obligation, this settlement, this swap, that swap. And that potentially it's been just kind of moved around in limbo constantly in dark pools that has kept really any of that volume, and this is the suggestion potentially back in 2020, from actually hitting the lit market. So it's possible that Ryan Cohen's buys were never actually settled, and that what Roaring Kitty has been suggesting this year, potentially with his 5,000 options blocks, right? So his blocks of 5,000 calls, which he's been trading, and his share orders. So his 9,001,000 shares of GameStop reached in June, June 20, is it June 13th? What would have been after his? Yeah, I think around June 13th, he updated his number to 9,001,000. And then when he filed his Chewy 13G on, I think, around the 26th or the 27th of June, that was 9,001,000. And this number, of course, references Ryan Cohen's 9,001,000 shares that he purchased in 2020 that have been largely hailed as one of, if not the major factor in propelling the 2021 sneeze of GameStop. Now, this is very interesting because this suggests perhaps one of the reasons why Roaring Kitty is so confident about the continued value of this play is that not only have, say, shorts never closed, right? Superstonk, GME, so these big old theses, right? A lot of the DD in the DD library says, of course, that, okay, shorts never close. These short positions are still open. They've been internalized, right? Just like Bill Huang's swaps, which are, hey, tomorrow is when Bill Huang's swaps back from 2021, as they were re-upped by Credit Suisse in 2023, they'll be expiring tomorrow. So, of course, that a lot of there's these open short positions in the form of swaps that have been bundled up. I mean, Always Sad But Truthful's been talking about how there's potential GameStop shorts going all the way back to 2008, right? That were bound up with the mortgage-backed securities in 2008, basket swaps that are still being kicked around, right? In addition to all this, in addition to these trades not being closed, in addition to these not being settled, what's suggested here is that potentially absolutely nothing of Ryan Cohen's order, absolutely nothing of Ryan Cohen's actual shares, Ryan Cohen's actual purchases back from 2020 have been truly definitively settled and are kind of bouncing around in, for lack of a better term, settlement hell. And that some of this activity, potentially what Roaring Kitty is suggesting here, is that this activity is visible in our dark pool data. Potentially, that's what has been settled. Which, I mean, the implications there, if that's true, mean that, yeah, the 2021 event was just not even really the beginning, not even really the beginning. That was brought about um, solely based on sort of retail buying. The sort of the share buybacks from the company in 2019, that potentially all of that we saw in 2020 was related to those share buybacks, to just a small fraction of potentially short institutions closing, such as Melvin Capital. And that really, what Ryan Cohen did with his purchases was throw a wrench into the system, but that very little of his actual purchases definitively found their way to rest. I mean, that's what it seems to be suggested here. At least what I took away, I would say conjectured, based on a lot of what I had to read from what Brandon points out here. But, go take a look. Certainly very interesting data. Of course, none of this is financial advice. None of this is trade advice. And none of this is anything that I'm certainly that I'm certain about, right? But this seems to be, right, where would this volume potentially be coming from? How does this relate to what Roaring Kitty has been signaling or symbolizing with his clearly symbolic trades? Is that potentially what's being suggested here? So something very interesting to consider. So, of course, what are we looking at? So then what are we looking at this week? What are we thinking about in terms of price action, maybe going into the end of this week, going into earnings? Well, earnings when they do happen to happen, which we'll address in a bit. Going into sort of March OPEX. And I would say, right, one of the things we've noticed is a high degree of correlation with GameStop and the S&P 500. That's been going on for weeks. I would say probably since the end of February, where we really definitively started to move to the downside, kind of after this last hurrah. After past couple weeks, we've seen XRT go on the Reg Show threshold security list. I think it may have officially moved off there. I have to double check that. Do I have the XRT? No, I don't have it pulled up. So we'll double check that. I think it did come off Reg Show, but it's been on there for about 2 weeks, which means it's had fails in excess of 10,000 shares for at least 3. So basically, going back to the week of around the 19th, 18th, 19th, it would have started to have accrued excess fails, right? So all of this is to say that we are seeing this bigger market crash, right? We did talk about this back in early February. We had this very bearish cross. If we take a look at the S&P, we saw this. We see this here in the S&P. We saw this cross with Bitcoin as well, this double top. And really what we talked about back in February and talked about this several times, that this formation is basically indicative of this double top formation. Looks very similar to the 2022-2023 bear market scenario, that in terms of our momentum, we're looking at something very similar here, where we have not only a downturn in short-term momentum, but we have a turning down in some of our deeper momentum indicators as well. And of course, what we're using to judge this, we're taking a look at the weekly chart, and we're using Roaring Kitty's price momentum oscillator himself, which characteristically uses this 55-week simple moving average as a signal line. So we got this big bearish cross way back, basically after this first top in, I think this was in maybe early January. We started to move up for a good portion of January, and then early February started to move down. But characteristic of this was this entire time that we were going for this second all-time high here, we had our shorter-term moving averages moving down, signaling weakening of momentum. We got that bearish cross. But then the real downturn here after the second all-time high was when we did start to see that deeper 55 simple moving average move down as well. This week earlier, I wrote about how we really quickly and really sharply moved past basically all of our daily supporting technical levels. Right, so we hop on over to trading views for a second here. We love the charts. Pull up the charts. Everybody loves the charts. Chart time. Let's see. Share this tab instead. Let's take a look here. So I pointed this out in the analytics, but of course, right, this is what we're looking at, and it's just been melt straight through all of these daily supports. So this is the 20-day, 50-day, 100-day. Now they're all bunched up and curling down. And then the 200-day also didn't even matter, fell right through that, right? A lot of sell volume picking up, a lot of deleveraging, right? And there's a lot of users out there been talking about this being a major deleveraging event. So in part, this may be anticipating the deleveraging of the yen carry trade. Yet again, as Bank of Japan is expected to raise interest rates by yet another 25 basis points, announcement will come end of next week. Excuse me, not end of next week, 18th and 19th. So that's going to be the middle of next week, prior to March OPEX. We do see the yen strengthening versus the dollar. So we do see a bit of that. It's not going crazy. So US dollar weakening versus the yen, yen strengthening versus the US dollar. So like I said, not going crazy just yet, but it is continuing on that trajectory. So will we get a sort of deeper plunge there with respect to the Bank of Japan decision next week? I think it's possible. I think we see some of that being probably priced in now, but then of course there are also another post you should check out. He's been really active over on Superstonk. I really like his work here. This is, let's see. Let's find user. It's what can I make today? He's active on Twitter. Here it is. What can I make today? Really love what can I make today's work. It's been really good about taking a look at borrowing, also filing petitions, for example, to the SEC. Really love what can I make today's work here. So recently, so yesterday, if you have a chance, check out right on time here. Okay, someone yesterday, of course, borrowed $100 million from the lender of last resort. But very interestingly, what is the name of this? I forget. It's not the PPE loans, but it's a year ago, right? It was these bank bailout loans. Oh, he mentioned this is not the post. In any case, right, there were, what can I make today has been tracking March 11th was the expiration of a number of loans. Here we go. These are the BTFP, Bank Term Funding Program loans. So last year, right, so, or I should say 2023, so 2 years. Yeah, not last year, but 2023, we had a number of banks fail, right? So we had SVB, Silicon Valley Bank failed, Credit Suisse failed. Of course, this is bound up with Bill Huang's Archegos Capital's failed trades collapse in 2021. Federal Reserve stepped up in early March of 2023 and basically set up this bank term funding program that allowed, and this is, I did not know about this, the exact details of this. So this is what's great about what can I make today? It's put together here. And that is that the bank allowed, or the Federal Reserve allowed banks, allowed major institutions to use the market value of securities upon which the bank had already incurred significant paper losses, to use that as collateral for bailout loans, essentially, right? So as far as I understand this is something like they had already bet via derivatives on something like, a particular stock losing value or gaining value. That bet failed, but then that was allowed to be used despite the fact it had high paper losses, was then able to be used in order to get essentially free low interest money that had to be has to be paid back now. um, but what can I make today is suggesting here is that this money was used to pump liquidity into the markets, potentially pump a lot of securities to allow portfolios for these banks to look a bit better. And then possibly what we're seeing now as a part of this deleveraging, not only do we see yen carry trade stuff, I mean, this also may have been folded into the yen carry trade, which is another thing to consider. That part of this deleveraging is the fact that the BTFP program is coming to an end this year. This was a 2-year bailout program. Well, not a direct bailout, but essentially a bailout that had to be repaid and has to be repaid around now. So some of that deleveraging we're seeing now is potentially related to this BTFP, Bank Term Funding Program loans. And then, of course, right tomorrow, we have the Archegos swaps are coming due that were re-upped by Credit Suisse shortly, but basically on the day that they failed, or 2 days before they failed. So we took a look at that early last week, if you want to go check out that video. Okay, so what does that have to do with what we're looking at now? Well, basically, it doesn't look like we should expect that deleveraging to stop anytime soon. We did find a little bit of stability yesterday. We still hit a new low, right? This is what I pointed out. We still hit a new low, had a pretty bloody morning, and then a very volatile move all the way back up to about 563. That was that historic price level. So 563, I have it marked here, this green line. 563 is basically where last year's March-April downturn started. So we logged 563 was the all-time high as of March 2024. We had a correction down to the 20-week moving average. So about a 3-week correction. This is actually right after this started, right basically at GameStop earnings, Q4 earnings, which were good. GameStop tanked basically through the whole of this. We went into April OPEX, and it basically took until the end of April for the market itself to dig itself out of this hole. So this little cauldron that we see here, this little cauldron also reflects a very steep cauldron we saw over in GameStop. So for example, if we head over here, this is our daily. So let's go weekly here. Take a look at our weekly. So that's this, right? So we had earnings reported here, right? So we traded up. We started to trade down basically like we did here. So here's the turn of the year. Really good Q3 earnings report. And then all of a sudden we start to trade down, trade down, trade down. We kind of leveled out in most of February. And then March earnings comes up, right? Trade down a little bit, right? Also, yeah, we had this brief reprieve here in late February, a little bit earlier this year. Brief reprieve in late February. Early March, then we start to move down. We go into earnings. Earnings dips below, right? So we actually open basically at the bottom of that candle there. Then we open up pretty high and then tank for another 4 weeks, even though earnings was very good. And that set up this huge move in May, right? So coming out of it in late April, and then a huge move in mid-May. What it looks like is we're also going through this type of pattern now into earnings, but maybe something like a couple weeks earlier, something like that. In any case, right, so we see this type of same formation, right? So coming down pretty sharply here into the new year, sharply into the new year, small recovery on the weekly, and then we get shorted back down again, down again, down again, down again, and we're a couple weeks out from earnings, so another 2 weeks or so. Do we move down? Do we head back to basically, right, we're going back to $20.50? It's very possible. It's very possible. As we'll take a look at our options data in a sec and see that yeah, that's very possible. Um, go right back, completely reverse, go right back here to where we were before we broke out of this pattern in late October. Very possible. Very possible, especially if we see continued weakness in the broader market. And as I said, there's no reason to suspect that that's going to stop anytime soon. If we take a look at our options data, it is just all puts, all puts all the way. Guys, all puts, just put city. Every $5 we have a huge volatility trigger. Huge. I would say 555 is smaller than some of the other ones we've seen. Maybe why we didn't fling down so hard into 550, but 550 really big. Well, now we're kind of back up here at 560. So I don't know, maybe we hang out here in the 550, 560 region for a little bit. If we do, we might see a kind of brief reprieve in GameStop rather than us just kind of drilling down day after day. 550 is big. If we breach 550, then we'll shoot down pretty hard. And there's really no reason. There is no safe space basically anywhere near us. It is volatility, and it stays that way. Certainly now it's increasingly looking that way into April OPEX. After April OPEX, we don't have too much OI basically developed quite yet. But just the amount of puts that we have built in here to March OPEX is ridiculous, right? Almost 50% of all of the gamma in SPY, almost 50% of market maker gamma exposure is bound up in long puts dated for the 21st of March. That is a massive amount of puts, and there's really no reason to expect that our downward trajectory on SPY is going to change prior to this mark. Maybe heading into there, we see some heavy profit taking next week post Bank of Japan decision. That like if we shoot down to, I don't know, 540 or something, and then we recover back up to 550, I'm not sure. We'll have to see how close we get to that. I would not be surprised if we did not if we move down here, right, to this basic support line here, right? So we have 509, 510 kind of below us with a 100 week simple moving average, but really this historical mark I think is our next destination. And I don't really see a reason why we wouldn't get there. I mean, that would be pretty steep. That'd be a pretty steep move, but it's not ridiculous to see. I think right. Basically another week and a half to see 530. I don't think that's insane. Could see us definitely this week closing down around, in the 550s, 540s. Could happen very easily. So if that does happen and we do continue to see weakness, very likely that we continue to see some weakness in GameStop just because those conditions, right, that major market volatility and downturn has these types of effects on GameStop, whether that's because all of these ETFs are just selling their shares of GameStop, or it's because, right, would recommend you take a look at Richard Newton's videos on this, right? This is because of specific price engineering mechanisms. We've talked about some of this. Richard, actually, his recent video does a really good job talking about how institutions use mutual funds and ETFs in order to loot shares to go ahead and short the stock, such that GameStop declines at a faster rate than the broader market, and that this is done in order to position GameStop optimally for potential swap rolls or something like that. So, so we could very easily go back down to $20. Yesterday we had a bit of a kind of a recovery day, very light. Seeing us 4.2 million shares traded, options activity pretty light, move back up to 2260 something in the close. We're a little bit up there now, I think, right? Pre-market we're in the 20. Yeah, we're kind of between 2065, 2070 and 2080. So nothing crazy. SPY's back up in the 560s. So certainly in order to see some recovery like that. Options activity, like I said, very light. We do see max pain moving down. Maximum pain's got us down at 2350. Some decent size, a couple standout options orders here. We're a little bit more bullish in the short term. We got some puts coming off the board. Bullish call activity at 2450 for this week. We did have some pretty big puts, some $20 puts come on the board for April OPEX. So this trader probably thinking April up. And actually, if we go ahead and check this out, we can go point this out. But if we do look ahead into April OPEX, looking bearish, right? Looking bearish. So right, like we see here. Actually, let me share this. Like we see here, if we do slide with the market, it's just going to take us down here. 2050 is where we have some neutral space there. So if we do slide 2050, we probably stop. 20 is kind of neutral, so we probably wouldn't. We would hang out here, which basically looks like, where we found bottom back in what? Basically September, October, 2050 area. Slippity slide on down. 2250 is not bad, but 22, 2150, 21. A lot of trader long puts accumulated there. We do have a lot at 20 now. That's a big, that April late order there. So here we have April OPEX basically at 24 and below. The outlook is bearish. We have basically all the way down to 18. So some traders are saying, maybe we go all the way back down where we were. It's not a lot of gamma. It's not a lot. Right, still minimal at this point because it's pretty far out. But right now, April OPEX, bearish, right? Bearish compared to what we usually see in GameStop. So we do see some of that building up. With that being said, so somebody opened a pretty big long put position at $20 for April OPEX, 2,500 contracts. It's a lot. 250K. A lot, right? Do I have that right? I think so. 250K. That's big. That's big at the ask. Somebody did open 1,800 contracts for the week before April. No, 2 weeks before April OPEX at 28. So a bullish order as well. But I would say slightly on the bear side if we see 2350 max pain here. Still showing as 24 over on Chart Exchange. Still 25s for later March, 26 for April 4. We don't have a ton of, it's very interesting to see, right? These are crazy numbers in terms of what we're looking at in terms of our ratios of calls out of the money. So right for this week, we're sitting at 97%, right? We kind of hover around 97, 98% of our calls out of the money. Puts only about 50%. A lot of puts for next week in the money, right? 2/3 of our puts next week are in the money, interestingly. And then April OPEX, we're looking at that's pretty common, right? So 92% out of the money calls, that's common, right? We see that. But this is interesting to see here, right? For April 4th, we have 16,000 calls out of the money and 63 calls in the money. Something almost all of the puts are in the money. But excess of that, that's like 99.9% of all the April 4th calls are out of the money. 99.9% of the April 11 calls are out of the money. So interesting to take note of that. Taking a look right, like I said, on our gamma exposure, we're probably bound, right? We have market weakness. We're going to slide. If we don't, we kind of hang out here. Easy to move back up basically through 2250, 2350. If we do get that kind of stability, some more stability in the broader market, options activity can easily push us kind of through here up to about 2350. 24 based on the options volume we've seen, little tougher. 25, pretty tough. Not quite our call wall. Our call wall technically is still $30. But 25 is pretty strong now in terms of its in terms of the resistant effect there of market maker gamma hedging. Probably not easily moving through $25 on normal options activities. Honestly, probably not moving through 24 on normal options activity. But if we do get some kind of major announcement, some sort of major company action, maybe we do. That's the kind of thing we'd need to see, I think, to really definitively move up into this area, or something, I don't know, remarkable that causes the market to kind of recover a bit more. But in speaking in terms of announcements, thinking in terms of our IV situation, so we have been talking about looking at a 4-week IV appreciation ramp up. What's very interesting is, and I'm sort of curious about this, is to the degree to which Cohen might, pull a curveball and maybe announce earnings early or announce earnings later than expected. So, for example, it's possible he might do it in early April rather than the last week of March, and to see what that effect might have on our IV. So it started to ramp up basically on the anticipation that earnings is right around the corner. We're starting to see that build itself in, right? We should be, I mean, volume has been low. Options activity has been low. We should be at 52-week lows, basically seeing this type of activity. But that's not what we've seen, right? We have this basically since the 17th, since since this wave of, I guess, something, if this was FTDs or if this was a Rec 68 margin deferral closure from between the 10th and the 17th. Basically, once we got past this, we've enjoyed this very mild kind of background effect where IV has appreciated from, I think we got down, lowest we got down was on maybe the 14th. We got down to something like 68% per Schwab. And now, right, yesterday we got up in the 94s. Today we're opening around 93.5%. So, to have volume go way down, to have price go way down, right? That's not typically how GameStop's IV works. GameStop, when the price goes down, IV goes down. And when the price goes up, IV goes up. Well, our price has been going down, but our IV has been bleeding up. So as soon as we do get some larger movement to the upside, and we even kind of saw that yesterday a bit, but a larger move to the upside will cause some very profound appreciative effects on our IV. And once we have that date set in stone, the closer we get to it, I think we're going to start to see some more chugging upward in terms of our IV valuation. I think we're going to see a bit more of that as we get closer to earnings and when the date is announced. So if Cohen comes out and announces that, okay, then brokerages, broker dealers, market makers know, okay, all right, here we go. Here's how to price this in ahead of over this span of time to achieve the results we want and protect our positions, et cetera, et cetera. But if they don't, then this is kind of going on in the background. They're working with a 25th as an assumption. If Cohen postpones it by a week, right, then maybe something a little different happens in terms of RIV. But if it does actually happen on the 25th and the 26th, maybe we start to really chug. So be interested to see when that finally, the company finally makes that announcement. Then, of course, we're still waiting on the 25th, 26th. Whenever earnings do come out, it'll be very interesting to see what the effects, say, of that the PSA partnership has been, right? They'll be thinking about, right, what Nat Turner's position with the company is going to be. It's going to be interesting to see if there's something of a closer partnership, something of a merger and acquisition between the two companies is going to be, is going to take place. We talked about this a bit during our last live stream. Was there a last one? No, I guess it was 2 live streams ago. It's the one called PSA Hype. So we'll review some of that actually for this week's live stream. And we are going to go ahead and take a look at the new PSA app. Larry Chang's been pretty excited about it. I'm excited to try it out to see actually how easy this is, right? I've been talking about the hypotheticals of the PSA app and the vault and the integration with GameStop and this whole process. So I might just do this just to see what actually happens. Does this work? How easy is this? Am I just, is this pure hopium or something like that? Or, is there something? I mean, it looks cool. I think I know what the answer is going to be, but I'll be honest, and we can do some of the trial stuff. Take a look at my card collection that I had as a kid. I don't even know what's in there. I know. We'll find out, but we'll take a look at that this Friday. But in the meantime, right, that's all from me today. We'll see what the market has in store for us. It is Wednesday, so a couple more videos. We'll see. Right, we'll have tomorrow's breakdown. We'll have Friday's breakdown, and then after market close, I think we'll go back to 4, maybe 5 Eastern time. We'll see. We'll see how it's shaping up, and then we'll go over the. We'll spend some time checking out the new PSA gadgetry. So very good. All right, guys. Thank you very much. Thank you always for watching and listening. We will see you tomorrow. Good luck out there with your trades, and let's go GameStop.